BlackRock's utility takeover raises MN rate fears. Minnesota regulators have approved BlackRock's acquisition of ALLETE, parent company of Minnesota Power, despite warnings that the deal could lead to higher electricity bills and reduced public accountability. The Minnesota Public Utilities Commission (PUC) voted in favor of the sale on October 3, 2025, ignoring the recommendation of Administrative Law Judge Megan McKenzie, who urged rejection of the transaction. McKenzie's review concluded that BlackRock's investment model could result in significant rate increases that will exceed the long-run rate of inflation, posing an unacceptable risk of rate shock in a critical and economically vulnerable area of Minnesota. Warnings ignored. The decision drew sharp criticism from consumer advocates and environmental organizations. By ignoring a lengthy record of opposition and choosing to approve this BlackRock deal, the Minnesota PUC made the wrong choice today, said Alyssa Jean Schaffer, Climate and Energy Director at the Private Equity Stakeholder Project (PESP). Private equity ownership of Minnesota Power will likely mean higher bills, less accountability, and more risk for Minnesotans. BlackRock's short-term profit model is simply incompatible with the long-term needs of a public utility, she said in a statement on October 3rd. Opposition came from a wide coalition, including the Minnesota Attorney General's office, large power interveners, and local community groups, all citing the risks of transferring a century-old regional utility to private ownership. Consumer advocates argued that BlackRock's Global Infrastructure Partners (GIP) fund, which manages over $100 billion in assets worldwide, operates under short investment horizons that prioritize investor returns over long-term rate stability. A shift toward private equity ownership. ALLETE, based in Duluth, serves roughly 150,000 customers in northeastern Minnesota, including some of the state's largest industrial employers. The company has made significant progress toward renewable energy adoption, operating more than 1,000 megawatts of wind and solar generation. The acquisition makes Minnesota Power one of the few investor-owned utilities under private equity control in the United States. Multiple news reports from late September and early October 2025 cite private equity's increased interest in acquiring stakes in electric utilities. This growth is driven by the demand for energy from AI and data centers, which presents a profit opportunity for private investment firms. However, experts caution that this model comes with hidden costs. Private funds often finance acquisitions with high levels of debt, and their confidential structures limit regulatory visibility into internal financial decisions. What's at stake is simple. Minnesotans could see their power bills rise while Wall Street investors collect profits, Schaffer added. Regulatory and clean energy concerns. Judge McKenzie's report noted plausible concern that meeting investor return targets would depend on rate increases exceeding inflation, creating long-term affordability risks. Critics also pointed to weakened transparency, as private equity firms are not bound by the same disclosure rules as publicly traded utilities. There are additional concerns about Minnesota's 2040 carbon-free electricity mandate. While BlackRock has publicly pledged to support decarbonization, its track record in similar acquisitions has been mixed. GIP's portfolio includes both renewable and fossil energy assets, leaving uncertainty about how aggressively Minnesota Power will continue expanding clean energy generation under its new ownership. PUC oversight and next steps. The PUC, a 5-member board appointed by Governor Tim Walz, attached several conditions to its approval, including annual reports on investment levels, reliability, and customer affordability. Still, opponents argue that the Commission has effectively placed the burden on itself to hold one of the world's largest asset managers accountable for public utility performance. BlackRock made lofty promises in order to win approval for this deal. It will now be on the PUC to enforce those promises, Schaffer said. We'll be watching to ensure BlackRock doesn't put profits ahead of people. The decision may also shape how other states respond to private equity bids for utility ownership. With reports that GIPs is in talks to acquire AES Corporation, this acquisition signals a broader consolidation trend, where Wall Street's influence over U.S. energy infrastructure is deepening, raising questions about who controls the transition to clean, affordable power. You've been listening to Sustainability Soundbites presented by E plus E Leader. For partnership opportunities, reach out to a member of our team.